Hi, good evening one and all. Welcome back to my channel. I have already finished chapter 2, that is risk management, and from advanced capital budgeting I have finished one example as well as illustration 1. Particularly in this video I am going to discuss illustration 2. I'll be discussing illustration 2 in a very detailed manner. But still, if you have any doubt, please let me know in the comment section. I'll try to solve your queries. Now, without wasting much time, let us quickly jump into a topic of discussion. First of all, before proceeding with illustration, I want you to understand this. NPV stands for net present value. What is the formula to find net present value? Present value of cash inflows minus cash outflows. Now consider in the question they have not given cash inflows. How you will find cash inflows? This I have been discussing from first video. There is one format, that is revenue minus cost EBDT minus depreciation EBT minus tax EAT, add back depreciation, you will be getting cash inflows. What you will do with these cash inflows? You will find present value of that cash inflows, and when you deduct cash outflows from present value of cash inflows, you will be getting net present value. Now let's see illustration 2. XYZ Ltd requires 8 lakhs for a project. It means 8 lakhs is cash outflow, or else you can say initial cash outlay. One is the same. Useful life of project is 4 years. Salvage value or residual value is given as nil. Depreciation 2 lakhs. Even if question has not given depreciation, we would have calculated it. How we will calculate? There is one formula. Original cost minus salvage value divided by useful life. Original cost is given as 8 lakhs. Salvage value is given as 0. Useful life is given as 4 years. So 8 lakhs divided by 4 is equal to 2 lakhs. It means depreciation per annum is 2 lakhs. Expected revenue and cost excluding depreciation, ignoring inflation. It means these revenue and cost are real revenue and cost. How I got to know? Because question clearly specified ignoring inflation. Ignoring inflation means real. So they gave us revenue of 4 years and cost of 4 years. Applicable tax rate is 60% and cost of capital is 10% including inflation premium. See, they gave us revenue and cost which are real, but discounting rate is including inflation premium. It means this is nominal discounting rate. I have already told you cost of capital is nothing but discounting rate. Calculate NPV of project if inflation rates per revenue and cost are as follows. Now we are expected to find net present value. See, if you observe in the question they have not given us inflation premium. Instead, they gave us inflation premium for revenue and cost each year separately. Then how we will take inflation premium? Now see. First, I will mention year. How many years do we have? 1, 2, 3, 4. Revenue. Is this revenue real or nominal? I mean, is this revenue inclusive of inflation or exclusive of inflation? This is excluding inflation. It means real. How I got to know that this revenue is excluding inflation? Because it is specified in question. So first year revenue is 6 lakhs. Second year revenue is 7 lakhs. Third year revenue is 8 lakhs. Fourth year revenue is again 8 lakhs. Now, inflation rate is given separately for each year. See here, 10%, 9%, 8% and 7%. So I'll be noting down here 10%, 9%, 8%, 7%. Now, nominal revenues. So 6 lakhs into 1 plus 10%. Here, now please listen carefully. In the second year, what you have to do? You have to include inflation of first year as well as inflation of second year. So it will be 7 lakhs into 1 plus 10% into 1 plus 9%. And in the third year, you have to include inflation of first 2 years. 1 plus 10%, 1 plus 9%, 1 plus 8%. And in the fourth year, you have to include inflation of preceding 3 years. 8 lakhs into 1 plus 10%, 1 plus 9%, 1 plus 8%, 1 plus 7%. I'll be showing calculation for first year. Remaining 3 years, please try to do on your own. 1 plus 10%. Sorry, 1 plus 10% into 6 lakhs. 6,60,000. For the second year, it will be 8,39,300. For the third year, it will be 10,35,936. For the fourth year, it will be 11,08,452. I'll show calculation for second year also. Please try to do for third and fourth years. 1.3. 1 plus 9% into 1.1 into 7 lakhs. 8,39,300. So now we got nominal revenues. Now we will do the same for cost. We are having 4 years and cost is given as 3 lakhs, 4 lakhs, 4 lakhs, 4 lakhs. Is this cost real or nominal? This cost is real because in the question they clearly specified without inflation. Inflation rates in the question given as 12%, 10%, 9%, 8%. These are inflation rates. Now we will calculate nominal cost. So for the first year it will be 3 lakhs into 1 plus 12%. For the second year 4 lakhs. Here you have to include inflation of first year as well as second year. 1 plus 12% into 1 plus 10%. For the third year it will be 4 lakhs into 1 plus 12%, 1 plus 10%, 1 plus 9%. And for the fourth year it will be 1 plus 12%, 1 plus 10%, 1 plus 9%, 1 plus 8%. I'll be showing calculation for first year. For remaining years, please try to do on your own. 1 plus 12% into 3 lakhs. 3,36,000. For the second year, it will be 4,92,800. For the third year, it will be 5,37,152. And for the fourth year, it will be 5,80,124. Now, I got nominal revenue and nominal cost. With these, I can get nominal cash inflows. How we will find nominal cash inflows? There is one format: revenue minus cost, EBDT minus depreciation, EBT minus tax. Tax rate is given as 60%, EAT. When you add back depreciation, you will be getting cash inflows. How many years do we have? We have 4 years. Now, nominal revenue we got is 6,60,000. So I am writing here 6,60,000. For the second year, it is 8,39,300. For the third year, it will be 10,35,936. For the fourth year, 11,08,452. See, 6 lakhs, 8,39,300, 10,35,936, 11,08,452. And costs 3,36,000, 4,92,800, 5,37,152, 5,80,124. Now we will be getting EBDT, that is 6,60,000 minus 3,36,000, 3,24,000. And for the second year, 3,46,500. And for the third year, 10,35,936 minus 5,37,152, 4,98,784. Eleven lakh 8,452 minus 5,80,124, 5,28,328. Depreciation already given in question as 2 lakhs per annum. So EBT will be 1,24,000, 1,46,500, 2,98,784, 3,28,328. Tax 1,24,000 into 60%, 74,400. 1,46,500 into 60%, 87,900. 2,98,784 into 60%. So it is 1,79,270. 1,79,270. 3,28,328 into 60%. 1,96,996. So we will be getting EAT 1,24,000 minus 74,400, 49,600, 1,49,000. 1,46,500 minus 87,900, 58,600, 2,98,784 minus 1,79,270, 1,19,514, 328 minus 196,996, 131,332. Now when we add back depreciation, we will be getting our cash inflows. Depreciation per annum is 2 lakhs. So cash inflows for the first year will be 2,49,600. For the second year, 2,58,600. For the third year, 3,19,514. And for the fourth year is 3,31,332. Now, since we got cash inflows, we will be finding out present value of cash inflows. Here is given as 1, 2, 3, 4 cash flows. Are these cash flows real or nominal? Nominal cash flows. Because while calculating revenue and cost, I have included inflation. So nominal cash flows for the first year 2,49,600. I'll be noting here 2,49,600, 2,58,600, 3,19,514, 3,31,332. Now present value factor. Present value factor or discounting rate or cost of capital, one is the same, which is given in question directly. See here, 10%, and this cost of capital or discounting rate or present value factor is including inflation. It means it is nominal discounting rate. Now we have nominal cash flows and nominal discounting rate. Nominal discounting rate, which is given as 10%. So for the first year it will be 0. See here, 10 divided by 100 plus 1. So 1 divided by 1.1, 0.909. Since I have calculated for first year, please try to calculate for second, third and fourth years on your own. For the second year it will be 0.826, for the third year 0.751, and for the fourth year is 0.683. Now I will be getting present value of cash inflows. How I will get? When you multiply cash flows with present value factor, 2,49,600 into 0.909, 2,26,886, 2,58,600 into 0.826, 2,13,604, 3,19,514 into 0.751, 2,39,955, and for the fourth year 3,31,332 into 0.683, 2,26,299 plus 2,39,955 plus 2,13,604 plus 2,26,886. So present value of cash inflows is 9,06,744 minus cash outflows. Cash outflows or initial cash outlay is given in question as 8 lakhs. So net present value will be 1,06,744. So this is the end of solution. I hope that I'm very clear with this problem. See, after solving the problem, you will be getting two questions. The first question is why we are not doing problem in another situation, that is why we are not using real discounting rate. In the question they gave us nominal discounting rate. Why we are not solving problem by using real cash flows and real discounting rate? So the answer is, since they have not given us only one inflation rate, we cannot convert this nominal discounting rate into real discounting rate. That's why we have solved this problem by using nominal cash flows and nominal discounting rate. The second doubt is why we are not solving problem with the help of real cash flows and nominal discounting rate. So the answer is, you cannot use real cash flows with nominal discounting rate. You can use only real cash flows with real discounting rate and nominal cash flows with nominal discounting rate. This I have already told you in yesterday's video. Since they gave you nominal discounting rate and you cannot convert nominal discounting rate into real discounting rate because inflation is not given, that's why you are using nominal discounting rate and you are converting real cash flows into nominal cash flows with the help of inflation. So I am concluding my session here. If you have any doubt, please let me know in the comment section. I'll try to solve your queries. If you like today's video, please do like, share and subscribe to my channel. Thank you.